Yo, what's up, guys? Welcome to the live trading session. I hope you guys are doing well. Hope you guys had a great trading month so far. I see a lot of new faces in here. So before we start, I'm just gonna let you guys know what a live trading session with me looks like. Usually what I'm going to be doing is that I'm going to be sharing my screen, and then what I'm going to do is that I'm going to be going through the currency pairs that's on my watch list, just analyzing it live in front of you guys, and also give you my thoughts, my trade bias, and pretty much what I think price would do over the next few hours, over the next few days, right? So you can literally see me apply market mechanics in real time in live market conditions, right? So yeah, that's pretty much what the live trading session looks like, which means that I need you guys to lock in, right? So for the next one, I will set aside your distractions, just focus on what I'm about to say, and just make sure that you really try to digest what I'm about to do, right, on the charts in front of you, right? So what I'm going to do is that I'm really just going to take my time to break down EURUSD, right, how I analyze it from top to bottom, and what I think price would do, what I believe price is going to move towards next, which means that when I do that, like I said, I need you guys to focus, right? I need you guys to lock in, right? So just look at the chart, right? Focus on what I'm sharing right here for the next 1 hour or so. And hopefully by the end of it, you have extreme clarity in terms of how I analyze the charts. Okay, so are we ready? Are we good to go, right? Just let me know down in the chat, locked in, right? Just type locked in the chat if you're like ready for me to start. Locked in, are we locked in? Locked in. Let's go, baby. Okay, cool. Let's get started, right? So I'm gonna start with EURUSD as usual, right? And throughout this live trading session, I'm gonna make it as interactive as possible, which means I'm gonna ask you guys certain questions, so make sure you pay attention. All right, so first of all, we got EURUSD, and like I said, what I'm gonna do is that I'm always gonna start off by doing my top-down analysis, which means I'm analyzing the charts from a higher time frame down to the lower time frame, so that I can actually determine my trade bias, and I can decide exactly where and when to buy or sell. Right, so I do that by analyzing the market structure and identify the trend direction on my higher time frame. So right now we are sitting on the daily time frame itself, right? So that's the first thing I do. I like to come in here. Let me just get rid of everything, and I can start from square one, right? So I like to just map out, like, you know, all the most obvious break of structure, right? Obvious break of structure right here, boom, 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 bullish break of structure, and this tells us that right now the buyers are in control of price because right now market structure is bullish. And the next thing is that you want to identify the swing range, which is where you want to focus on, right? There's a lot of noise going on right here. There's a lot of random candlesticks right here, which you don't want to care about, right? This is what price is doing in the past. You want to care about what price is doing right now in the moment, right? In the present moment. So this is where you want to identify the most recent swing range, right? And you can see this is the most recent break of structure, which means this is the most recent swing low, and this is the most recent swing high. Okay, you guys should still be with me so far, right? Because I believe everybody on this call should be very well versed with market structure, even the beginners as well, right? But anyways, that's the swing high and that's the swing low. And we know that this right here is the range that we are trading within right now. So ideally, I will only want to focus on the price action that happens within this 1.208 to 1.144 area, right? But the thing is, this is a pretty large range to focus on, right? I want to further refine that zone so that I can actually invest my time, energy, and attention on a much more tighter range. This is where it's important for you to go down one time frame, right? So right now we're on the higher time frame. We have determined that the market structure is bullish. The swing range is this high and this low right here. This is the range that we are trading within right now. Buyers are in control of price. So ideally, I should be looking for longs. That's all I do on the higher time frame, right? That's it. Higher time frame, only objective is to determine the market structure, understand who is in control of price, buyers or sellers, and to identify the trend direction. That's it for the higher time frame. And then once that is done, then you move down to the medium time frame itself, right? So this right here is a market shift if we get a follow through, right? So this right here, where we get a candlestick closure below the low right here, this could either be a liquidity sweep or a market shift, right? That's another thing I forgot to mention to you guys. If it's a liquidity sweep, then what must happen is that after the price comes down, take out this low, it must go up there, creating a market shift, and then the internal structure will remain bullish. If it's a market shift, what must happen is that price must later on come down here and take out this wick low, continuing this bearish break of structure, which means sellers are in control of price. Okay, so at this moment, right? Judging by the current price action that we have going on right here, we got a candlestick closing below this low, so we can assume that it is a market shift, but we cannot confirm that it's a market shift until price comes down and take out this low right here. Okay, so it's not really like a confirmed market shift, right? If you're applying the mechanical rule, then yes, by definition, it is a market shift, but it's not validated yet. Okay, so next we go out to the medium time frame, which is the 4-hour time frame, and this is where you want to really identify the internal range and also your point of interest. Okay, so this is where you try to find out the location in which you are entering the trade from. So 4-hour time frame, you can see what we have right here. This is your structure being formed right here as well, right? This is the internal structure that we have saw on the higher time frame. Now we are just zooming in, just looking at price using a microscope, and we saw that, okay, internal structure, price is creating lower highs, lower low, lower high, lower highs, lower lows. All of this is what? Your internal break of structure, right? So you can actually map all of those up as your internal break of structure, internal break of structure. And then if you keep on doing that, you will come to a conclusion that recently we actually did have a market shift where price went up there and take out the last strong lower high, which tell us that, you know what, we do got a market shift on the internal structure, right? Which means that the internal structure has shifted from bearish to bullish. Okay, so right now, internal structure is bullish. That's the story of the market right now. Okay, so internal structure is bullish. This is where we can also try to identify our internal low, right, which is the lowest point that led to the market shift, and your internal high, which is this high right here, right, this high right here. Yeah, this is the internal high, this is the internal low right here. Or if you want, you can also call this the 4-hour swing high and the 4-hour swing low. Now, within this high and this low, that is your second layer of internal structure, right? Because what we have is price goes up, pulls back, goes up, pulls back, goes up, pulls back, goes up, pulls back, right? So all of this is also internal, sort of like internal structure. And I think this is where a lot of people get confused, right? A lot of people get confused is because they treat this first layer of internal structure exactly the same as the second layer of the internal structure, right? And that is why it's so important for you guys to like just differentiate the both, right? So that's why I always advise you guys to do layer by layer. So once you go down to one time frame, you just go and map out like the most obvious internal break of structure first. And then whatever that's in between those like minor break of structure like this is your second layer of internal break of structure. Okay, that's the second layer of the internal break of structure itself. Right, so if we look at the first layer of internal structure, this is the internal low and this is the internal range, internal high, right? So this is the entire daily internal range, but it's also the 4-hour swing range, right? This is also the 4-hour swing high and 4-hour swing low. And then within this 4-hour swing high and 4-hour swing low, then you got all of these minor break of structure right here that's going on right here. This is the second layer of internal structure. Okay, before you move on, does everybody understand what I just said right here about the two layers of internal structure, right? Just let me know down in the chat, yes or no, right? Because I really want to make sure that everybody understand that before we move on. Okay, so internal structure, within that bigger internal structure, that is your micro internal structure. And it's important for you to differentiate both, so you do not mistake the internal break of structure as the macro internal break of structure. Right, so that's the first thing you guys must understand. Okay, so once we are done with that, then this is where, once again, if you're looking at a 4-hour swing range just by itself, what does it tell us? What is the story, right? You want to build a narrative. You want to try to determine what is the objective of price. Well, we know that price has made a pullback, came all the way down here to this swing low right here, and then perhaps it gave us a liquidity sweep where price came down and took out this low. Perhaps there was so much buyers in the market, there was so much buying pressure and momentum in the market that allowed price to move all the way up here and take out the last lower high, giving us a market shift which allows the internal structure, the first layer of internal structure, to shift from bearish to bullish. So the 4-hour time frame right now is technically bullish because we got a market shift to the upside, which confirmed to us that this pullback is over. Now, here's where it gets a little bit tricky, right? Remember earlier on, just now when we talked about on the higher time frame, on the daily time frame, we talked about how this could either be a market shift or liquidity sweep, right? Like this line right here. Because right now price is in the middle of nowhere, we don't know for sure, because we know for a fact that if price comes down, take out this low, this becomes a valid market shift, which means that the entire swing structure has shifted from bullish to bearish. Okay, so that will validate the market shift if later on price comes down and take out this low. But that has not happened yet. So we don't know for sure whether this is a valid market shift because there is a lack of follow through. Now, this could also be a liquidity sweep where price came down, sweep the liquidity below this low, and then push price up. Right? So in this case, what happened was that smart money came down, pushed price down, swept all the available liquidity below this low, and then caused price to go up there, break the last lower high, causing the internal structure to shift from bearish to bullish, which allow us to be where we are right now. Okay, so ideally what I want to see is for price to pull back and then later on come up there, take out this strong high, no, this weak high, giving us another internal break of structure to validate this market shift, to confirm that market shift, for me to really know for sure that this right here is a liquidity sweep for the buyers to take control of price, for price to continue shifting bullish on a swing structure. Okay, so that's ideally what I want to see, right? If this is a liquidity sweep, right? But because right now price is in the middle of nowhere, it has not taken out this high, it has not taken out this low, I don't know for sure whether, this is a market shift or it's just a liquidity sweep. Okay, so it all comes down to the follow through, which is what price will do next. So that's what I'm using the 4-hour time frame for, right? I'm using the medium time frame to kind of gauge like, okay, what's going on here, right? Is it really true that, okay, price is actually bullish because the daily time frame says so? Well, it depends, right? It really depends. So right now on the 4-hour time frame, we got a market shift. This is the swing range that we have mapped out right here. And ideally what I want to see is, like I said, price pull back and then go up there, take out this last high if it's bullish, and price comes down, take out this low if it's bearish. So in this case, what we can do is to just go and map out the point of interest in which we are expecting price to move toward next. Right, so in this case, this is where you can come in here, you draw your zones from the extreme, right? So you draw your extreme zone right here, and then you draw your another nearer demand zone right here, and then you continue mapping it up until you get to where price is at right now. Okay, so introducing another concept, which is the premium and discount tool. You drag it from the swing low to the swing high, and this is where you can see that price is still quite high up in the premium pricing, which means that there is more room for price to pull back to. Right, chances are price will be gravitating towards one of these 3 demand zones that we have mapped out right here in the discount range, because that's where there is more fuel for the market to continue bullish, right? If it wants to continue bullish. So in this case, that's where we are expecting price to move toward next. Okay, this is where price is at right now. We are expecting price to move toward to either one of these gas station, if you like to call it, so that it can grab more fuel and it can continue bullish. So this also means until price reach either one of these point of interest here, you should not be looking for longs. You should not be looking for longs. Okay, remember just on the daily time frame, we said that we should be buying, right? But just because we should enter for a buy doesn't mean we should enter for a buy right now. We want to enter for a buy at a gas station, right? Where there is fuel, where the car can get enough fuel for it to go up, right? We don't want to enter for a buy when price is in the middle of nowhere. So in this case, I'm not doing anything right here. I'm not looking for longs here. If anything, I should be looking for shorts because I'm expecting price to come down here, right? So I'm not looking for long for short. Okay, whether I want to look for short or not, that depends on what price does in the 1-hour time frame and a 15-minute time frame, which I'm going to go through next. Okay, but for now, just to give you guys a bias in terms of a swing trader who want to trade with the higher time frame trend direction, the daily time frame trend direction, the guy who want to look for longs, you shouldn't be looking for longs until price reach either one of these point of interest in here. And then when it does, what do you do? Right? Let me know down in the chat. This is maybe for the more advanced traders who have went through the causes. When price gets down to your point of interest, what do you do before you actually enter for the trade? Okay, so look for entry model, wait for flip zone, right? There's a mixture of answer right now, right? Go to lower time frame, look for entry model. Good, right? So this is really where the more advanced traders, they will be able to answer this question, right? Because they go through the causes, they understand what you're supposed to do at each stage. And this is where they will know that if price comes down to our medium time frame point of interest, we jump down to the lower time frame to look for our entry model. Okay, so the entry model is a combination of, we got multiple entry models, right? Entry model number 3, 4, 5, 6, right? That is the entry confirmation that you want to look for once price get down to a point of interest. And then when it does, you get your confirmation, you get your trigger, you check off your checklist, then you enter for the trade, right? So yeah, that's how I will approach price if I want to look for longs. Okay, so if I want to look for longs, that's how I'm going to be approaching price. I'm going to wait for price to come down to either one of these point of interest right here, get my entry confirmation, get my entry model, then I look for longs. Okay, so that's if you are looking for longs. That's what you should do. Now, what I'm going to do right now is that I'm going to show you how I will approach this price action in the eyes of a day trader or even a scalper who is trying to catch the current move, right? Who is trying to trade what price is doing right now. Because like I mentioned earlier, if you look at the internal structure, price is actually bearish right now. And if we know for a fact that price is going to come down here, then it's going to go up, why not short it all the way down here? Right? So that's what a lot of you guys might be wondering. Cool, I want to trade this. I want to trade this counter trend. How do I go about doing it? Well, let's get into it. So right now, this is the 4-hour range. Okay, this is, like I said, the 4-hour swing range. This is the first layer of the internal structure on the daily time frame. The second layer of the internal structure on the daily time frame is like all these micro moves that we have within the market right here, within this entire range. Understand that price is fractal, okay? As above, so below. As below, so above, right? So that is the law of the nature of like fractality, if that's even a word, right? So this means that over here, what we have was price goes up, pulls back. Okay, this is an internal break of structure, right? You can map all of those tiny little break of structure right here. And if you do that long enough, eventually you will be able to figure out where is the most recent internal range. Okay, so once again, you do it step by step, right? You map out all of these tiny little internal break of structure in here. Okay, and then you will see that over here, what happens is that price came down, take out the last internal structure right here, giving us a market shift. Okay, giving us a market shift right here. Now, this market shift occurred on the 1-hour time frame. But on the 4-hour time frame, this is actually our fractal market shift. Once again, this is why we use fractal market shift, is so that we can identify that there is a market shift on the lower time frame without actually going down to the lower time frame. So that's another misconception when it comes to the fractal structure. Fractal structure doesn't mean that the lower time frame structure has like shifted. No, fractal structure just allow us to see what is going on the lower time frame without actually going down to the lower time frame. So in this case, when I get a fractal market shift just like this, I know for a fact that on the 1-hour time frame, internal structure has shifted from bullish to bearish. Let's see whether that's true. Well, it is true, right? Because this is the last internal low, right? And what happened was that we got a proper market shift right here. Okay, so once again, you can see it more clearly right now on the 1-hour time frame that all of this is what? Your second layer of internal structure, right? All of this little move that we have right here. And if you want to get a little bit more complicated and really dive deeper into the nuances, you will realize that within this internal structure, there is a third layer of the internal structure right here, right? All of this is like micro internal structure, right? But let's not get too ahead of ourselves right now, right? Let's just focus on the second layer. That is enough, right? So second layer, right? You can see all of this internal structure right here. Boom, later on we got another market shift right here. But this market shift is just for price to pull back to the last internal lower high, maybe mitigate some supply right here. And then later on came down here. And then this is where price is at right now, right? So let me just start to map this out properly first. Okay, internal structure right here. And then later on price came down, gave us a fractal market shift right here, or even like this one right here. And then later on price came down, right? Internal break of structure. And then this is where you came to a conclusion that this right here is the 4-hour internal range, which is also our 1-hour swing range right here, right? And this is the area in which we are trading within right now. So right now, your objective as a day trader, as a scalper, is to try to look for shorts, right? Because we know that price is going to come down here. Okay, we know that price is going to come down here. And then next question might be, where do you want to be looking for shorts, right? So you do the exact same thing, right? Try to map out your point of interest, try to make sense as to where price will move toward next. Okay, so in this case, I'm looking for shorts. I want to enter for a sell at supply zones, right? So this is where you try to map out where are the supply zones. Okay, you always go from the extreme, right? So you go from the extreme. This is the last internal break of structure right here. This is my supply right here, and then there is another one quite subtle right here. I don't really like this. This is a very fractal supply zone, which means it's not that strong, which means price is most likely gonna blast right through it. But I'm just gonna map that out, right? Just for your sake. So in this case right here, this is where price is at right now. Okay, this is at where price is at right now, and over here, what is price fundamentally doing, right? That's the question you always want to be asking. What is price fundamentally doing right now? What is the objective of price? So we know that price is gravitating toward this supply zone or this supply zone and then shifting bearish. Okay, so once again, you know what? Let me just be a little bit more precise and just map out like this supply zone that we have right here as well. Okay, so just so that I don't miss anything right here. So anyways, we know that price is going to come up to either one of these three supply zone and then start shifting bearish. Okay, but what we don't know is which supply zone price is going to move toward next. It could move toward this one and then start going down. It could move toward this one, start going down. It could move toward this one and then start going down. So in this example that you can see on the screen right now, which point of interest do you think price is most likely going to move toward next before it starts reverse and head back down? Zone A, Zone B, or Zone C? Let me know down in the chat. Which zone do you guys think price is going to move toward next before it starts going down? Once again, we don't know for sure. All we can do is to like just develop sort of like a hypothesis, right? To just develop like a theory as to where price will move toward next, but we don't know for sure. It could be any one of these three supply zones right here. Now, once again, I realize that a lot of my more advanced students inside the 1% Club is saying A, right? Because they know for a fact that the more extreme zone is much more high probability. Okay, it's much more high probability. Because price has to hold at this zone for it to remain bearish. If price take out this supply zone, what happened? We got a market shift, right? This is the last lower high. Price take out that supply zone, we got a market shift. Internal structure is going to start shifting bullish. So price is most likely not going to take out that high itself. So in this case itself, right here, you don't know for sure where price is moving toward next. But in terms of probabilities, we know for a fact that this zone much more stronger than this zone and this zone because it's the extreme zone. Okay, like I said, it's all a game of probabilities. It's not a game of certainty, just a game of probabilities, right? So in this case, all we are trying to gauge is that, hey, price can move out to either of these supply zone and shift bearish if there is enough liquidity, if there's enough fuel. But out of all of these zones, this one has the highest chance of holding. That's it, right? That's it. That's the statement that comes to mind right now. So in this case, we are thinking that price is most likely going to move toward this area right here. Okay, so once again, here's where it gets a little bit nuanced, right? If you look at this swing high and swing low, and you look at the fractal structure that we have right here, right? Look at the fractal structure right now, okay? Look at the fractal structure. If you look at the fractal structure, you realize that what we have was a fractal market shift. Okay, what we have right here is a fractal market shift. This fractal market shift could indicate that right now, the internal structure, the third layer of the internal structure right now, is shifting bullish to facilitate the pullback to this zone right now. Okay, right there. So in this case, internal structure could potentially be shifting bullish, Remember just now earlier on when we said that, if you're a day trader or you're a scalper, you should be looking for short, right? But once again, what is price doing right now? Is price going down now? Or is price going up now? That's the immediate bias. That's the internal order flow. That's what price is doing right now. So if you're a day trader and you're a scalper today, you should be trading with that direction. Right? So in this case, we got a fractal market shift, which once again is not a confirmation that price is going to start pulling back, but it's just an indicator. It's just a signal that price might start pulling back and start shifting bullish right now. In order for us to validate this market shift, remember, just now like I said, we need that break of structure, right? We need the price come up here, take out this high here, then we know for a fact that, hey, we got an internal break of structure right here. Buyers has took back control of price from the sellers. Demand has exceeded supply. Right now we're shifting bullish and price is going to go up here. Okay, so if I want to, trade this move, trade this pullback, ideally I want to get an internal break of structure right here, validate this fractal market shift, then I can maybe play the pullback right here, buy at a high low and trade it all the way up to this extreme supply zone that we have up here. Okay, so that's if you're trying to look for longs. If you're trying to look for shorts, ideally you should be looking for short at this area right here. Okay, at this extreme supply zone right here. Now, in this case right here, right, once again, let's map out the point of interest that led to this fractal market shift. This is the extreme demand zone over here. Okay, right here, this is the extreme demand zone right here. And then there's maybe like another demand zone right here. And then there's potentially another flip plus sweep zone right here. Okay, so this is the flip plus sweep zone because price reacted from this flip supply zone right here, creating a failed reaction that swept liquidity. So this becomes like a flip plus sweep zone. Once again, a little bit more advanced for the people who don't know what that is. Don't worry, eventually you go through the courses, you will learn what that is. Right, so in this case, you got a flip plus sweep zone. You got the other this like normal flip zone or demand zone right here, and you got an extreme zone. Right, so in this case, if price want to go up here, right, to give us the internal break of structure over here, like what I mentioned, to validate this market shift, what must happen is that there must be enough buying momentum at either one of these zones for price to move up. Either one, right? Either one. So once again, how do we know which zone price is going to respect and is going to cause price to go up? We don't know for sure. All we can do is to just observe and react accordingly. We don't want to assume, we don't want to anticipate, we just want to react accordingly. So in this case, if I'm looking for longs today at either one of these zones right here, right, because I'm a little bit more aggressive, I don't want to wait for the internal break of structure to validate this market shift, I just want to enter for longs right now. Maybe because I saw a fractal market shift right here, I saw another fractal break of structure right here, and now I'm thinking that price is going to shift bullish, I want to look for longs, right? So if you want to look for longs at this point in time, you can look for longs at either one of these point of interest, given the fact that your entry model presents itself at either one of these point of interest. Okay, so for this case right here, like I said, we don't know for sure which zone price is going to respect and then go up. Okay, we know it's either one of these zones right here. So if I'm looking for longs, like I said, I want to find my entry model, right? So my entry model, all of those entry models have two criteria, and that is a market shift and a liquidity sweep, right? Market shift confirm a shift in structure, liquidity sweep confirm a shift in internal order flow, right? Confirm that price has gotten the fuel it needed to push price up, right? So in this case, where is the last fractal lower high for us to know that there's going to be a fractal market shift, right? So in this case, price goes down, lower high, lower low, lower high, lower low, lower high, lower low, lower high. Okay, so this becomes the most recent fractal lower high, which means that for a fractal market shift to occur, price must take out this low. So the bare minimum, if I want to look for longs today, right, I want to see price take out this last fractal low, give me as a fractal market shift, and then also sweep liquidity, right? That's where I'm asking myself, where is the available liquidity, right? So you look towards the left-hand side, you see that, hey, maybe there's some liquidity sitting below these lows right here. And perhaps price is sweeping the liquidity below this low, using it to fuel price up, take out this low, give me as a fractal market shift, and then we go bullish, and then right now we can potentially look for longs. That is our entry model, right? But in this case right here, Prices came down, mitigate the flip plus sweep zone, swept liquidity below this low right here. If you look for longs right here, like if you enter for a buy position right now, you are using the aggressive version of the entry model, which states that you should enter right after the liquidity sweep and the point of interest mitigation without the market shift. So you entering for longs right now is correct if you are using the aggressive version of the entry model. If you are using the conservative version of the entry model, then like I said, you want to wait for your fractal market shift, which only happened once price take out this last lower high right here. If price take out the last lower high, you got a fractal market shift. Right now, price is going to shift bullish and happy days, right? Then you can look for longs if you see price pulling back to your point of interest that created the fractal market shift. Okay, so once again, is everybody still with me, right? Let me know how much percentage of that do you guys understand? Like 100%, 50%, 75%, just let me know, right? Because I spent the past 34 minutes breaking this down, even though if I could have just went through this in like 5 minutes, right? Because I'm very well versed, I'm very familiar with how to apply these concepts in real time by now, right? So at this point in time, I'm just like, hey, I can analyze this in 5 minutes, but I don't want to be doing that in front of your faces, especially when a lot of you guys don't even understand how to identify liquidity. So I want to meet you at where you're at, right? So yeah, I really tried my best to really like just break this down right here to just show you guys the different perspective to approach price. Hopefully by now you should realize that there is no one size fits all approach. It all depends on the condition of the market. It all depends on your entry, your trading style, right? It depends on your risk tolerance, depends on your personality. I have pretty much shown you like the multiple ways to approach this situation right here. You can look for longs. If you're a day trader and a scalper, if you want to look for longs, this is how you look for longs. If you want to look for shorts as a day trader or scalper, you're much better off waiting for price to come up to this area. Then you do the exact same sort of like pattern, which is zoom down to your lower time frame, look for your entry model when price mitigate this zone. And as a swing trader, you can look for longs when price comes down to either one of these point of interest right here and give you an entry confirmation that tell you that, hey, structure is shifting bullish and then we are going to the upside. Right, so that's how you would fundamentally approach price from the eyes of a day trader, the eyes of a swing trader, an eye of a scalper. Yeah, an eye of a scalper right here. Okay, so entry model number 3 right now, entry model number 2, right? So this will be the aggressive version of entry model number 1 or 2. Yeah, this will be the aggressive version of entry model 1 or 2. Okay, cool. So that's it for EURUSD, right? Now, do you guys want me to spend another 30 minutes breaking down one more currency pair or break down like 2 pairs, right? Just let me know down in the chat, 1 or 2. 1, I can go super deep once again, right? Just giving you guys the different analysis. 2, I can do it like really kind of fast. Okay, so what I'm going to do is I'm going to go through gold right now because a lot of people are requesting gold. Okay, okay. So once again, there's a very mixed answer right here. Okay, there's a mixed sort of answer here. I'm just going to go through gold, all right? I'm going to go through gold. And then if we have time, we will go through another currency pair, right? Okay, so let me just try to erase everything right here. Okay, so because I've went through super duper in-depth on EU, I'm not going to repeat the same sort of like in-depthness on gold. I'm just going to like speed run the parts where you guys already understand, like the top-down analysis, and just give you guys like a high-level idea of like what to look for, all right? Okay, so in this case itself, this is the most recent break of structure, right? Swing low, swing high, okay? First step, swing low, swing high, that's it. Now within this swing high and swing low, what do we have? We got your internal break of structure right here. So if I'm looking at the internal break of structure, I can see that, hey, this is the internal break of structure. And then this right here is also an internal break of structure. So swing low, swing high. Internal high, internal low. Where's the internal low? All right, let me know down in the comments. Let me know down in the chat. Where is the internal low? Is this the internal low, or this the internal low, or this one right here? 1, 2, 3. Which one is the internal low in this case right here? Swing low, swing high, internal high. Where's the internal low? So the internal low is situated at the most recent internal break of structure. So where is the most internal break of structure? This is a swing break of structure. This is the most recent internal break of structure, which means that by definition, this is the low that led to this internal break of structure. So by definition, this is the most recent internal low. Okay, so internal low is situated at number 1 right here. Okay, so this is the internal low. Right, so let's get rid of all of those markings right here. And I will map that up as my internal low. Okay, so this becomes my internal low. Cool. Right, so if you look at the price section right here, internal low, internal high, right? So we are playing within this internal range technically right here. Okay, just so happens that our internal high is also at our swing high as well. So that's pretty cool. And once again, right, we know that price is bullish on a swing structure, but that doesn't mean that price is bullish right now. Okay, there's a difference between the swing structure and the internal structure, which is what price is doing right now. So if you look at a 4-hour time frame, you'll see that, hey, we got price coming down, take out this last internal low. But once again, we don't know whether this is a market shift or liquidity sweep because there is no follow through. Price is not taking out this low. If price taking out this low, market shift. Price did not take out this low. Instead, price go up there, take out this high, liquidity sweep, right? Just for price to shift bullish. And if you look out at the internal structure, you will see that, hey, we got price actually going up there, taking out the last internal break of structure, the second layer of the internal break of structure right here, taking out the last internal lower high, giving us a market shift. Okay, so this tells us that right here, this becomes our new internal low, and this becomes our internal high. But within this market shift itself, there is your internal break of structure right here, and then there's another internal break of structure over here, right? So let me just get rid of that, and then this becomes the most recent internal low and internal high, right? Later on, price came down here, take out the last internal low, giving us a market shift, which tells us that internal structure has shifted bearish, right? So internal structure is bearish right now. Okay, so I'm talking about what price is doing right now. Okay, so let's continue tracing where price is at. This is the last internal high. This is the last internal low. And yeah, I guess that's where price is at right now, right? It's within this internal range right here. And within this internal high, internal low, there is your further on like this like microsecond layer sort of like internal structures that we have going on in here. Okay, like if you map that up, you will be able to find out what is the second layer of the internal structure doing right now. So if you map that up, you'll see that, hey, let me just try to map that out for you guys. Price comes up here. This is the last fractal market shift. Fractal market shift right here. And then we got a fractal break of structure. And then we got another fractal break of structure. And then we got a fractal market shift. And then another fractal break of structure. And then this is the low, this is the high, this is the low, this is the high right here, and this becomes the internal range that we are trading within right now. If you go down like one step even further, right, you will see that within this, there is also a micro sort of like internal break of structure, which we are not going to map it out because it's just going to like make things more complicated than it already is, right? But this is where you can find out, hey, this is the range that we are trading within right now. This low and this high right here. So just by looking at this right here, let me know what will you guys do. Will you guys enter for a buy or enter for a sell right now? Or wait, you know, those are the three options. Buy, sell, or wait. Okay, so in this case itself, once again, you want to do your best to do your analysis, because when you do your analysis, you do your preparation, you do your research, this is where you will be able to develop the trade ideal where it has the highest probability of working out. Once again, not certainly, but like highest probability of working out. Okay, so in this case, let's look at what price is doing right now, okay? Market shift over here tells us price is shifting bearish. But in order for this to be valid, price must take out this low right here. If price take out this low here with a nice candlestick closure right here, okay, nice candlestick closure, this means that we got a bearish break of structure, internal bearish break of structure, and right now price is shifting bearish. Okay, so ideally for us to really determine that price has officially shifted bearish, we want to see a nice candlestick, a bearish candlestick closing below this low. But did that happen? It hasn't really happened yet, right? What we have was we got this nice like lower wick break, right? So lower wick break just like this, which is not a candlestick closure. So I'm a little bit skeptical of the fact that this is indeed a valid market shift because of the lack of follow through. Because this could just be a liquidity sweep for price to shift bullish. Okay, it could just be a liquidity sweep for price to shift bullish. So in this situation right here, once again, let's jump down one time frame to see what price is really doing. So I want you guys to use all the concepts you have in the arsenal. That's what market mechanics is about, right? It's about using as many weapons in the arsenal as possible to fight the enemy, which in this case is to just develop a trade idea, right? To just understand what's going on here. So one concept that comes to mind right now is liquidity, right? So what we have was price comes down, pulls back, goes down, goes up, right? So this is double bottom, equal lows. We all know that that's an inducement, which means that it's available liquidity sitting below this low. No wonder price came down, create this long low wick, because it was just wanting to sweep all of this liquidity right here, right? Sweep all the liquidity below this low to shift bullish. All right, so that's one of the weapons that we can use, right? Is the liquidity thing. Next, use your point of interest, right? So if you look at your demand zone, your supply zone, whatever, your order block, whatever, you will come to a conclusion that, hey, if you look at the left-hand side, price goes up, pulls back. At this point in time, price started reversing. Not only did it reverse, but it reversed very aggressively with a lot of imbalance, right? All of this is just imbalance right here, which means there's a lot of buying pressure, a lot of buying momentum, which also means that this, somewhere around here, this must be the origin point that institutions look for longs. That's what your demand zones, your order block is, right? It's just the origin point. It's the location in which smart money have entered in the past, and it's most likely going to enter again. So in this case, once again, you look towards the left, you see, hey, so much buying pressure. Let me find the origin point. If I find the origin point, I can see that this is the most lowest point that led to this entire move right here. So this must be our demand zone, right? Demand zone. And then this right here is also your order block, right? So this is the order block because there's a lot of imbalance, boom, origin point, order block. Okay, but since price is already break past that area right here, I don't care about that. So this is what I really care about right here. This demand zone over here. Once again, what is the market trying to tell us right now? The market say, I'm gonna push price down, right? But when price is approaching this area here, I don't have enough liquidity to go down. So as a result, what happens is that the buyers have came into the market and just pushed price all the way up here, leaving a trail behind, which is this low wick right here, which indicate to us that the sellers try, right? They attempt to push price down, but there's insufficient liquidity. There's insufficient sellers in the market to push price down. As a result, demand exceeded supply, buyers overwhelmed the sellers, and right now price has reversed and moved toward the upside. So that was the liquidity sweep. Shows us liquidity sweep is working, right? It's doing its job right here. This demand zone is also working, right? Because price seems to be respecting this demand zone. Yes, we got a little wick break, but this is just, you know, a liquidity sweep, right? At the end of the day, price did respect this demand zone. So all of those signs right there just tell us that, hey, maybe price is not as bearish as I think it is. Once again, this is so important for you guys to understand, to perceive the objective reality of price rather than your subjective perception of price. Because early on we thought that, hey, price might be shifting bearish, right? All of this selling pressure, market shift, price going down. But is that what price is doing right now? No, because after really doing our rational analysis, doing our logical research, we've realized that maybe price is not bearish right now, right? So you can see the difference right here. Most traders lose because they impose their subjective perception of the market onto the objective reality of the market. As a result, they try to trade their bias of the market, they try to trade their belief of the market rather than the market itself. So in this case, when I'm doing my market mechanics analysis, I am trying to be as objective as humanly possible. And I know that, hey, after doing all these analysis, I realized that the bars are in control of price, which means that ideally, maybe I shouldn't be looking for shorts yet, right? Maybe I shouldn't be looking for shorts yet. So I'm going to wrap this up right here, right? So what happened over here is that if you look at what price is having, like right here, this is like price comes down, pulls back, goes down, pulls back, right? It's a very sort of like bearish market structure that we have right here. So once again, using our fractal structure, we have determined that this is the last fractal lower high. So if price take out the last fractal lower high, we got a fractal market shift, which confirm a shift in structure, which means price is shifting bullish. Now, this is where you also want to try to map out the demand zone that led to the fractal market shift, right? And this would be the extreme demand zone right here. Obviously, let me just go down to the 15-minute to make it a little bit more clearer for you guys to see, right? So that is your 15-minute demand. And then this right here is your 15-minute flip zone itself. Okay, so flip zone, extreme demand zone, and right now, okay, you know what? Let me just ask you guys, right, to see who's still paying attention. Who is in control of price right now? The buyers or the sellers? Let me know down in the chat. The buyers or the sellers, who is in control of price? Okay, so a lot of people say buyers, right? So in this case, we got a fractal market shift, all right? We got price respecting this demand zone. We got price sweeping the liquidity below these lows. So by definition, technically, we are bullish. All right, so we are bullish right now. And price has came down to either one of these zones right here. And once again, it's very simple. If you're day trading or scalping, if price comes down to your medium time frame point of interest, you immediately jump down to your 5-minute time frame, your lower time frame to look for your entry model, right? If you get a fractal market shift, a liquidity sweep, your entry confirmation, your entry trigger, then you can look for longs right there. Okay, so yeah, wherever point of interest in which you are getting the entry from, then that is where you can look for longs to trade it to the upside. Okay, cool. So in this case, okay, so I want to like give you guys the full picture, right? So in this case, if I enter for a long somewhere around here or here because I see my entry confirmation, what I'm going to be doing is that I'm going to be trying to understand where price will move toward next, right? So the first place where price is definitely going to move toward next, if price wants to go up, is this high right here, right? This big high over here. This is also the next 15-minute supply, and it's also the most recent like sort of it's also the most recent high right here. So if I'm looking for longs around here, the first area that I want to be targeting is gonna be like this area right here. Okay, that's the first area. Okay, stop loss will obviously be at a point that invalidate your trade ideal, which is the last liquidation candle, the below the point of interest, which once again we covered in our entry models, right? When it comes to take profit, you want to place it at where price is moving toward next. So in this case, this is where price is moving toward next. Now, where's the another point of interest where price can move toward next? Well, you look towards the left, you see all of these supply zone right here. These are essentially where price will move toward next before it can potentially get a reaction to move to the downside. Okay, so either one of these point of interest right here. Now, on a sort of like macro perspective, right? If you zoom out a little bit, this is where you can see there's even like this extreme supply zone up here. And once again, this is where a lot of people like get confused, right? They enter for a buy right here, they try to target all the way up here. Now, I'm not saying it's not possible. I'm saying that, once again, you don't want to be trading your subjective perception of the market. You want to be trading the objective reality of the market. If you guys were to take away anything from this particular lesson itself, it would be you guys want to be trading the objective reality of the market itself. So the objective reality of the market is that, hey, price is going to move toward this area first, right? This supply zone that we have marked up right here first. Like that we know, not for sure, but like in terms of probabilities wise, it's most likely going to move towards here than here, right? So I'm going to be targeting right here. Okay, so yeah, that's what I want you guys to understand, right? Is to really like just place your take profit at the point of interest where price is most likely going to move toward next, right? So in this case, it'll be right here. If price take out this area here, it could come up here, right? This next supply zone right here. If you take out that, then it will come up here and here. And if you take out that, then you can potentially look to target this. But you don't straight away go and jump to the final boss of the battle and try to target this, right? So let me just quickly answer some question. Felicia says, how do we know we don't wait till extreme demand zone to mitigate before bullish? Like the case just now, EU is going bullish where not mitigate demand zone. So entry models, right? So if you see your entry model right here, you got a lot of like confirmation to tell you that bias is actually pushing to the upside right here. You got your market shift, you got your liquidity sweep. Then that's the confirmation that you can have to just execute for longs and pray for the best, right? Like once again, we don't know for sure, right? But that's what you can do to ensure that you're entering at the right time. Allegra said, isn't there a lot of liquidity under all those lows in the flip zone that should be taken first? 100%, right? This is why, like I said, right, you want to look to enter at a point of interest that give you the entry model. Now, notice I didn't say, hey, you should enter for a buy right here. I said that it could happen at either one of these point of interest, whichever one that provides you with the entry model, right? So in this case, there's all of this available liquidity sitting below these lows right here, right? So what can potentially happen is that price can come down here later, sweep all of those liquidity, tap into the extreme zone, and then shift bullish. And if that's the point of interest that gives you an entry model, then yeah, you can look for longs from there. So Abdullah said, do we use the second layer of internal structure for immediate buyers? You can, depending on your trading style, right? If you are a scalper or you're an intraday trader, it might make sense for you to use the second layer of internal structure. So it all comes down to like, what is your objective? Like, what are you trying to do with price? Because I want you guys to think of it this way, right? Every single concept that you guys use in market mechanics, every single price action that you look at, every single sort of structure that you look at is essentially a piece of the puzzle. It's just a piece of the entire puzzle. So as much as possible, you want to gather as many pieces of those puzzles so that you can make a well-informed decision, so you can make a sound judgment, right? And sometimes you might need to use the second layer of the internal structure. Sometimes you might need to just use the first layer. So you want to use these pieces of the puzzle to try to formulate your bias, where you can have like these hypotheses where you kind of know to a certain degree that, hey, price is moving towards here or here. I'm going to be looking for buy. And if I'm looking for buy, I'm going to be targeting here or here, right? So, yeah. Thank you for coming to my TED Talk. Right, so that's pretty much it. I really wanted to like dive super duper deep into like those two currency pairs and like just give you guys like everything. I think that obviously there's a lot of nuances, right? Like, hey man, maybe there's this scenario that can happen in the market. The liquidity sweep can happen right here. The push inducement can be appearing right here. The pull inducement can be happening. All of this advanced stuff, all of these nuances which you will learn as you go through the courses. As you go through the courses, you will learn all of this juicy stuff right here, right? But I really wanted to like just spend this lesson here, just dissecting how I personally trade and how I think through my trades. Because it's not as simple as, hey, I'm just gonna end up for a buy right here because the market is up. Or I'm gonna end up for a buy right here because price is at the order block. No, it's like I said, using the different pieces of the puzzle, piecing them together to form a bias to create like a well-informed decision as to where I think price will move toward next. Okay, so before we end here today, I got a favor to ask you guys, right? So if you guys have found this session helpful, or you found 1% Club or 1% Accelerator, whatever program that you're in helpful, please do me a favor. So what I want you guys to do is to send this to your friend or family who is looking to start to learn trading, right? I'm doing this free 33-day Market Mechanics Mentorship on YouTube for free, right? I'm not selling them anything whatsoever. I'm doing it for free, right? Which means that for the next 33 days, I'm giving them one free course. Now, once again, you guys have the privilege or you guys are fortunate to be part of this mentorship program, but your friends, your family members might not get the same opportunity as you do, maybe because they cannot afford it, or maybe because like they just don't know me, right? So help me, help you, help me make this industry a better place. Help me change more life by spreading the message, spreading the love, elevating the consciousness by just letting them know, hey, if you want to learn trading, join Brad's free Market Mechanics Mentorship, right? It's for absolutely free. It's obviously a tiny portion of what you guys learn here. You guys get like 100% of it, but they get like maybe 10% of it. But that 10% of it goes a long way, right? It really just allows them to have the right foundation so that they can actually like start trading profitably, right? So that's all I ask for you guys, right? If you guys enjoyed this session, if you guys enjoyed 1% Accelerator or 1% Club, send this mentorship to your friends and your family or anyone who is interested in trading. Help me make this industry a better place. Help me make this world a better place, right? So with that being said, I hope you guys have enjoyed this live trading session. Just continue going through the courses, right? Continue trusting the process. It's only a matter of time until you will be able to get to that point where you can analyze the charts just like I do, with so much clarity, with so much confidence. Just keep going, right? Keep showing up and you'll win in the end. Okay, so thank you guys. I hope you guys have enjoyed this. If you guys have any questions, please bring them on to the next coaching call. I look forward to speaking to you guys on there, and I wish you guys an amazing week ahead. All right, thank you and have a good time, guys. Take care.